Good morning, ladies and gentlemen, and welcome to the NWR Communications Near-Term Producers Conference. My name is Kerry Stevenson, and I will be your host for today. And first up, we have a really exciting company, Jervois Global. They are building an independent cobalt and nickel company. And for those of you that have been following cobalt and nickel, very exciting times for both those commodities. Joining us today is James May. He's the CFO. He'll be talking to us about what Jervois are doing at the moment, and more excitingly, they have just entered the ASX 300. James, great to see you. Welcome to the conference, and over to you.
Thanks, Kerry, and look, welcome everyone. It's really great to be here to open the NWR conference. Look, I'm really going to take you through three topics today. For those who are less familiar with Jervois, I'll kick off shortly with an introduction, an overview in terms of our asset portfolio and our strategic context and what we're trying to achieve as a company. We'll pivot to talk briefly about some of the recent developments and highlights of the business, and then we'll close just with a short summary in terms of what we believe differentiate Jervois and what we really believe the investment thesis is for investors going forward. So look, just to start with the introduction and the overview, Jervois is, our objective is we're building a vertically integrated global business to meet demand for cobalt and nickel. And we've grown through a series of acquisitions in recent years. And what we have today is a portfolio of 4 core assets. One of those assets is already in operation. In Kokkola in Finland, we acquired in 2021 what I call sort of the remnants of Freeport's cobalt processing business. It's a high quality processing operation. We take in cobalt hydroxide, we go through a 2-stage transformation process, and we bring those refined cobalt products to market through a wide range of end users and customers geographically. So already we have an operating footprint. We've guided the market that business will be generating between $50 and $55 million in EBITDA this year. Supported by favourable sort of tailwind that we've seen in the cobalt sector that we'll come on to talk about. Elsewhere at ICO in the United States, we acquired a part constructed mine site in 2019 from a company called Cobalt, and really sort of since then we've finished the studies and fully financed and now in the advanced stage of construction to build what will be the United States' only source of primary mined cobalt that it's seen for many decades. So really sort of neat mining project, sort of small underground mine, a couple $100 million per year in terms of revenue, but it's going to be a good quality, high margin asset when it comes online, and absolutely strategically significant in terms of providing that supply chain security in a critical mineral within the United States. SMP in Brazil, back in 2020, we announced an acquisition structure for the proposed acquisition of the São Miguel Paulista refinery in Brazil. It's a refinery facility that ran successfully as Latin America's only nickel cobalt processing facility. Ran for many decades. It was put on care and maintenance in 2016 by its former owners around the same time that the associated upstream nickel mine had depleted, and really from the perspective of the owner in Brazil, it made sense to look to exit that business. And so what we announced is a pathway where over the last 12 or so months we've been doing studies. We had full access to that facility. We're doing a restart feasibility study, and we're pretty close now to being able to announce the outcome of the stage 1 studies, and subject to that outcome and also finalising a couple of other requirements locally in Brazil, we would expect to announce the closure of that acquisition later this year. And then fourthly and finally, the Nico Young nickel cobalt project in Australia. Whilst ICO and SMP are very near term in terms of development opportunities, Nico Young slightly longer dated. We are continuing to progress drilling through the course of this year. It's a nickel laterite deposit that's in New South Wales. Again, provides a great longer term optionality for the company in terms of potential for that asset to be developed should the nickel market support a long-term development trajectory. And so putting that all together, what you see along the bottom is a basic depiction of the value chain. What I like about our portfolio is that not only is it sort of near term with one operating asset today, two very near term opportunities in the US and Brazil, but really we've got diversification both geographically and across different parts of the value chain. So what it gives us is a platform that we're working towards developing to really give us, in a few years from now, a really sort of strong multi-asset portfolio with three cash generative assets. And just to recap on a bit of the background as well around the evolution of the company, you know, Jervois went through a wholesale reset as a listed company in 2017. It was a transformation that occurred at the time in terms of renewal of both management with the installation of a new CEO, Bryce Crocker, board members as well. And really, as you look across the bottom of this page, you'll see many of the names that we've now got in the team. What's sort of common to all of us is we've all come out of larger companies. We're all very passionate and engaged in the cobalt and nickel opportunities that we think are there, really in the context of the growing demand from electric vehicles. And you'll see, you know, we've got, you know, pretty deep expertise across sort of commercial, technical and other areas, very much grounded in some decades of nickel and cobalt experience. Many of the individuals came out of Glencore. Peter Johnson, as our chairman, was head of global nickel for Glencore. Bryce Crocker was part of the founding management team of Xstrata. Greg Young, head of commercial, helped build the cobalt sales book in the US for many years for Glencore. So really end to end, what we've been focused on in the last sort of 5 years is building a management team that we think is truly differentiated with the right experience in this sector and really have the, you know, the capability to harness and capitalize on the opportunity we see in demand growth going forward. And then across the top, as I mentioned on the previous page, we've really successfully grown through acquisition, 3 big acquisitions in particular. And you know, the market cap has grown commensurately from really sort of a micro cap back in 2017 to $1 billion plus today. And as Kerry mentioned at the outset, entry to the ASX 300 just recently. So to talk a bit about the cobalt price, you know, one of the aspects of our business that we see as attractive is that we think we're at a good place in the cobalt cycle. If you look at sort of near-term factors, we've seen a pretty strong tailwind over the last 6 months in terms of cobalt price, and that price levels have been driven up from somewhere sort of sub $20 a pound in early 2021, all the way through to where we are today, which is around sort of $38, $39 a pound. And really that tailwind is brought on by, you know, the pull through of the demand from electric vehicles into cobalt chemicals and cobalt metal. Really the thesis playing out the way that many of us expected. And what you sort of see today is a pretty good degree of tightness in the market that's continuing to support prices at these relatively high levels historically. I think when you look longer term, you know, this is a chart from the IEA. Certainly what we see when we look ahead is that, you know, particularly driven by electric vehicles, but not only by EVs, there is a strong demand story there. We, like many others in the industry, expect and fully anticipate there'll be some reduction in the intensity of the use of cobalt in certain battery chemistries. But notwithstanding that, you know, what really sort of swamps the any reduction in intensity is the sheer uptake of electric vehicles, the translation of that into greater demand for cobalt units, which really creates that positive demand outlook. And weighed against that as well, we think, is that whilst there'll be expansion of cobalt supply in regions like DRC and potentially Indonesia, that the way that expansion and that new supply will come on, it'll be staged, it'll be possibly slower than many are anticipating, and that will create some real opportunities if there is periods of market dislocation to see really tight market conditions that really favour those who are positioned to capitalise on that in the cobalt sector. And just turning to our strategic positioning as well. So, you know, the thing you would have noticed from the map that we present there is that we're very Western world focused, and you know, part of the rationale there and our strategy here is that when you look across the value chain on the left hand side here, there's two things that sort of stand out in battery supply and cobalt in particular, and that's the absolute sort of dominance of DRC and African supply of mined cobalt, and further downstream the Chinese sort of dominance in terms of processing and the downstream segments in the battery value chain. And so what we see is that presents a number of challenges that we hope to sort of move to become part of the solution for, is that concentration creates challenges both in terms of how customers think about supply chain security and diversification. And what we're looking to do with our portfolio, as we sort of summarize on the right hand side, is with our three assets, ICO, S&P and Jervois Finland, is really working towards building out that alternative, that supply chain alternative for customers and for industry participants, and do that in a way that's supported by a fully transparent and ethical supply chain. And if we can do that, we believe we've got a really good opportunity to not only sort of capitalize on the wider sort of macro trends in the cobalt sector, but also to do that in a way where we're genuinely differentiated in how we position ourselves in the industry. So that's a bit about our context. Just to touch on some of the business highlights briefly. So as I mentioned, Jervois Finland, an operating business. The numbers here reflect our last quarterly announcement, which we announced in January. So, what we looked at there is, whilst we acquired the business on 1 September 2021, Q4 revenue, when we look back on a sort of a pro forma basis, quarterly revenue of nearing $100 million US, represented some significant growth quarter over quarter, and in fact was one of the highest quarters that that business has had in recent years in terms of revenue. And it's partly driven by price, partly driven by some of the strength and demand on sales volumes in certain products, and really sort of a positive indicator that there's some momentum there that we'll continue to capitalize on in 2022. The EBITDA, whilst this year we've guided to 50 to 55 million EBITDA for the year at a $34.50 Cobalt price, which was the price sort of back towards the beginning of the year. What we did also see in Q4 last year was a slightly more modest EBITDA outcome, and that was really a result of some transitional factors. There's some features of the business model that means that the way that some of our contracts are structured, when the price goes up aggressively, what we see is there's sort of a lag effect in terms of that translation of that price growth into bottom line EBITDA, and therefore that Q4 EBITDA outcome was impacted accordingly. That doesn't have an effect in any way in terms of the potential for the business in the long term, but some near-term factors that created some noise in those results that we explained to the market back in January. When you look at Idaho and S&P, the key message here is we're advancing to operations. So the ICO project, I was just returned from 3 weeks travels, 2 in the US and 1 in Finland. Spent a week with the team in Idaho, spent some time at the mine site. Really good insights in terms of the trajectory and the final stage of construction. A lot of intense work going on there, both to continue to advance in the underground and also complete the surface construction that's required for the processing plant. So all remains on track there. And so consistent with our previous guidance, we fully expect the first ore to come through the mill in around August, with ramp up to first commercial or full commercial production rates towards the end of the year. So really sort of looking forward to that transition from development into operations. With
sorry to interrupt you, James. With the ICO, what's your sort of mine life there? You're saying you're going to start operations towards the end of the year, production, I should say.
No, it's a good question, Kerry. So the initial mine life is expected to be 7 years. Now, we wanted to get going quickly in terms of once we took ownership and getting into production and do something with a relatively modest capital expenditure scope. So what we elected to do is publish a feasibility study based on a 7-year mine life. But what we're also doing, as noted here, is we're doing drilling. We're starting with some infill drilling that will sort of pivot to some resource step-out drilling in due course. And really the view there is, to unlock as much expansion potential as we can to sustain that mine life well into the future, to the extent the resource supports that as well. So just to finish off on SMP, the studies are advancing. We've guided to announcing BFS stage 1 in Q1 22. We're clearly very close at the end of Q1. Reality is there. It'll be coming in early April, and that as I said is a good milestone in terms of that asset, in terms of demonstrating the restart potential of SMP in Brazil. And the critical link there, just to recap, is that ICO will produce an intermediate product, so the criticality of SMP is to be able to bring that down to Brazil to then finish the transformation of that product into a refined form that can then be sent from Brazil into the wider markets as well. And then on the corporate side, from a financial perspective, we funded the ICO project partly with a debt facility, $100 million US secure bond, and we completed the first drawdown of that in February. The other sort of key financing arrangements, we've got a working capital facility with one of our shareholders called Mercuria, and really the purpose there is that because of the way the business in Finland is structured, as prices move up, we temporarily require additional working capital, and that can be backed by a loan facility, which we put in place at Mercuria late last year, and early in Q1 is now sort of fully drawn, very much reflective of the buoyant market conditions that we're seeing for cobalt at the moment. And just to move on, I appreciate we're relatively short of time, but I just wanted to pause on a few pictures for those who want to relate to the visual impression of what's occurring in Idaho. And as I mentioned, I was only here a few weeks ago, and as you'll see, these are relatively recent pictures still, and as of a few weeks ago, there was still snow on the ground.
It looks bloody cold, James.
Yeah, look, it was, Kerry, it was, I think the lowest temperature I had a few weeks ago was minus 16. Yeah, I think it's starting to see a bit of spring weather since through a thaw, but real credit to the team there to work through winter, address all the relevant risks around, productivity and weather impacts, and remain on track. So highly sort of skilled, project and construction execution team doing a really good job to steer that through the final construction phase.
Does the weather, given the fact that you are in places like Finland, which can get, as you say, bloody cold, does that impact at all? Do you have to stop doing work at certain times of the year, or can you work year round?
No, we can work year round. So certainly in Idaho, we there were some particular challenges we had to address through being a construction site through winter, but certainly in the normal course, we'll have an accommodation camp up on site. We'll be operating, year round through the winter. There may be occasions when there's a complete, whiteout on the site and preventing things coming in and out. But really the operating philosophy will be to move year round. Finland's a bit different. Finland, it's an industrial park. There's no issues there in terms of operating year round. We're right next to the Kokkola port, so again, so logistically, there's no real risk there. But it's a good observation. We're sort of operating in cold climates. So just to bring it all together, just to round out a couple of points before we just pivot to Q&A. So really, the opportunity for us when you bring this all together is to become a significant player in the refined cobalt sector. So on a pro forma basis, if you combine Kokkola with the cobalt capacity that we hope to bring on at SMP, you'll see here that if you exclude China and focus on Western world supply, we've got real potential to have a really significant seat at the table in terms of refined cobalt production, refined cobalt supply to market, which is something that's really exciting for us as a company. And just to close, we do believe there's really good differentiation for Jervois. We're very economically aligned. As I said at the beginning, we're very engaged in driving this business forward. We're all investors in our own right. We believe there's a unique opportunity through Western world and particularly North American supply chain focus. The appetite for supply chain security is only going to increase, we believe, as we look at the world now and going forward. And in addition, we believe that the appetite is there for diversification. So not only sort of for geopolitical reasons, but for more practical, logistical and supply chain factors, that the offering we can bring to the market is one of diversification and full traceability with that as well, which we think is going to be important. Cobalt and nickel, we believe they're very much here to stay. There's going to be room for different forms of chemistry in terms of EVs and batteries going forward, but we very much believe cobalt and nickel will stay at the heart of that. And then I think, fifthly, but finally, we are an operating company. It's a key differentiator. You see a lot of companies that have aspiration. What we're building is a genuine multi-asset business. We're making the transition from developer to operator. We've got one operating asset, and if you look ahead, we think we're not too far away from realising our ambition of becoming a multi-asset operating company. Some big milestones to achieve this year through studies in Brazil, ICO, production coming online, but subject to that, we think the runway is strong and we think we're well positioned for the future. Kerry, I think I'll pause there. I think we're close to time, so maybe a chance to...
We are close to time. James, thank you very much. That was a really, really good presentation. I've got lots of questions. Unfortunately, so have everybody else. So I'm going to open it up to the floor. First of all, Carlo says, the transitional factors in Q4, are they impacting Q1 as well, or are EBITDA benefits of higher cobalt price feeding through now?
Yeah, no, it's a good question. So what I would say is what we guided to at our last quarterly result is at any period where the price moves up aggressively, you have these effects that mean that the translation to EBITDA is muted. And that's partly because the way we're structured commercially, that there's a lag in terms of the way some of our contracts are priced. We can be, through the cycle, we've got long-term customers where we price on, sometimes price on the prior month price, not the current month price. And that means that, as the price moves up, there's a slight lag effect. And on the purchase side as well, where we're purchasing our raw materials in Finland, our cobalt hydroxide ingredients, that we've got some repricing effects there that occur as well, some mark-to-market adjustments that can occur. So the price has moved up, not as sharply as it did in Q4. And any period where the price does move up aggressively, there will be an element of that effect to a greater or lesser degree.
Carlo, I just want to, there's a part two for him, so I'll just touch on that. Can you touch on what's happening with nickel sourcing for SMP?
Yeah, no, good question. So look, we continue to stay engaged with a wide range of players up and down the value chain, and we recognise that nickel sourcing is a key part of unlocking the full potential of SMP, and we'll continue to move those discussions forward, and we'll update the market at the relevant time once we've got news to announce.
Next question. Sean asks, do you foresee increased weight to more ore in the mix for JRV as you are set in refining cap?
Look, whatever we do going forward, it has to be done on a value accretive basis. We've got good participation in the mining part of the value chain and ore that we'll have from Idaho. We've got a longer dated option with Nico Young as well. Whether we do anything else, the time will tell. I think for now we're really focused on delivering our key milestones at our core assets that we've got today.
Elias asks, how are you thinking about Nico Young? Like, how does that asset sit within the portfolio, I guess, in terms of importance and what you're going to be doing with that?
Yeah, no, thanks. It's a good question. We've been quite open previously that we've got a diverse portfolio. We've got a lot on. We think Nico Young will be well suited to a partnership structure. So our plan in the near term is to continue drilling and progressing our evaluation of Nico Young, and all the while keep the dialogue going with potential partners. And if there's a partner who we can bring in to help fund the next phase of studies, then that is potentially a suitable path in terms of progressing that asset.
Given that asset, it's in New South Wales, isn't it, James? How big is it? Where is it? And how did you come across it?
Yeah, like it's a decent sized nickel laterite asset. It was really it was part of what I might call sort of the legacy Jervois portfolio. After the transformation occurred in 2017, so it sort of came from that. It provided an opportunity to progress studies back around 17, 18, and created a bit of a tailwind that opened the door on acquisitions elsewhere. So look, it's a good good size asset. The grade isn't spectacular. It's nickel laterite. We think we could process with a heap leach solution. A little bit capital intensive, so that we think the right thing to do is to keep progressing it, but we do also need to focus on our delivery of assets and opportunities elsewhere as well.
Well, speaking of that, James, the SMP acquisition in Brazil, when are you expecting to finalise that, close it, and get underway?
Yeah, no, thank you, Kerry. It's so as I mentioned, we're on pretty close to being able to announce the stage 1 SMP study outcomes, which we've guided the market to previously would be around Q1 or the end of Q1. And once we have that in hand, we're still working through the final stage of the operating permit locally with the City Hall, which again we've guided the market to. And once we work through both of those factors, we'll be able to give a more definitive view to the market in terms of the runway to closing the acquisition.
James, it was interesting. One of your slides earlier showed just how much cobalt is coming out of China, like the dominance of that market.
Yeah.
Is your cobalt going to be, I guess, in terms of quality, do you think there's going to be more demand for your cobalt versus cobalt potentially coming from other sources?
Look, it's an interesting question. I mean, there's the different types and forms of cobalt chemicals. Some that we produce in copper are quite sort of specialized and attract relatively strong premiums as a result. And so I think the answer is it depends. On the more sort of commoditized end of the spectrum, it truly is a commodity product. And then the more you move towards sort of more specialized products like the ones moving in Kokkola, we think there's an ability to continue to differentiate ourselves through quality and reliability of supply, and continue to enhance and maximize potential for those pricing and premiums.
My final question, we've got no more questions on the Q&A, but my final question to you, James, is congratulations, first of all, going into the ASX 300. Your share price has had a very good, strong run. I think it's up 75% in the past 6 months. Where is the investment thesis going forward for Jervois Global? In other words, where's the value for investors potentially getting in now, the upside?
Yeah, absolutely, Kerry. Look, I think if you look ahead, there's a number of big milestones around ICO production, around SMP, around continued demonstration of the potential of our business in Kokkola. And so if subject to those milestones, if you sort of wind the clock forward in 2 or 3 years, what we hope to have is a multi-asset company with 3 cash generative assets. And if we achieve that and a good, strong, stable EBITDA outcome year on year, with the diversification that we think will sort of favour us in the longer term, really we think that there's opportunity and there's a lot of value upside that will come between now and our sort of full delivery of that aspiration in a few years from now.
Well, James, we've run out of time. Thank you so much for joining us and opening the NWR conference this morning. I wish you all the best. It looks like a fantastic project, lots of work to do, but also, as James said, they're coming into production. Very exciting times for Jervois Global. Thanks for joining us today.
Thanks, Kerry. Appreciate it. Thanks, everyone.